You're supposed to be selling when they're yelling, and the yelling in gold is about the most extreme it's been since 1979. So you nailed it. Yeah, it's right now it's just a little bit of profit taking, but it's what's happening in gold that's very disconcerting. As of yesterday, it was up 66% in the year. That put it among the top four of the last 100 years, with only 1979, 73, and 74 ahead of it. So it's very expensive. At the same time, crude oil was down about 20%. That disparity around 86% has never happened. It's never been that extreme. So gold going up, crude oil going down that much is a severe global deflationary force. And the question is what it means. I'm really concerned that also this is happening. One thing that has never happened to with stock market volatility this low. Gold usually goes up when stock market's having a problem. So I'm worried about a little bit of reversion, uptick in stock market volatility. Gold might be warning us.
Well, you talked about oil. What about the strengthening of the U.S. dollar? I mean, can you talk about that relationship between the dollar and gold?
Yes, it's definitely a key factor this year. The dollar's been weaker, gold's been stronger. All commodities are mostly denominated in the dollar. It's just not as much of a factor here. The key thing for the dollar is, first of all, we have a very controversial president, which is somewhat very good for gold. Every time Mr. Trump speaks and pushes back on the Fed, gold market seems to smile. And also we have recurring wars, and according to NATO, the second largest economy in the world being a decisive enabler of the war in Europe. So that's all really good for gold. The problem is it always goes up for a reason. I like to stick to the disciplines of, you just take gold versus its 60-month moving average. It reached the highest yesterday since 1981. And certain signals you're supposed to just ignore everything. And if you've been long, if you've been bullish, that's not a spot to be overweight long. It's usually a spot you're supposed to say thank you and give some back to the market.
So how much pullback would be a reasonable or a healthy pullback in gold?
Well, 4,000 was the key resistance. It's now support. It could easily pull back to 3,500. The significance, Paul, I want to point out is in 2011, when gold got this relatively expensive, it put in the high for 10 years. In 2008, when it got to around $1,000, it backed down about $700, about 30%. So a 30% correction from these levels is normal. The key thing is what could be a trigger, and I'm worried about a similar 2008 type scenario, because gold went down because everything went down back then. Now the problem is both. It could be negative for gold if stocks keep strong and volatility stays low. There could be a little pressure factor on the ancient store value. But if the stock market has a bit of a 5-10% correction, which we haven't had in a long time, that can push everything lower. So right now it's also the time of year we get volatility, and I'm kind of it just makes me very concerned about what might happen as we get through the end of the year.
Hey, Mike, we've been talking a lot about a government shutdown, right? I think we're in day 21 if we're keeping track. But the Commodity Futures Trading Commission, that report, that's been put on hold. I mean, how crucial is that for you to keep an eye on?
Well, I'm glad you mentioned the shutdown. We seem to have forgotten. It's also part of the perfect storm for gold, which might be ending. The COT data, commodity futures trading, is delayed. We haven't seen it for about a month. Before this happened, gold was not really overbought. So that, in terms of futures, the key thing you can watch is open interest. The key thing I've been watching, open interest in gold has been flat for years. It's not really jumping up. There's not a lot of signs of speculation in there. There's definitely pickup in ETF buying, ETF inflows. But the key thing that's really seems to be moving gold is the cash market. And central banks are still the underlying buyer below the market. The thing is, I think they're somewhat elastic. They're big buyers from 2,000 to 3,000. But as we get into 4,000 handle, I think they're going to be curtailing their buying.